Good morning. Here is today's Korean economic news briefing. Our top story today casts a shadow of caution over the recent economic recovery. The Korean government has, for the first time in 8 months, issued a direct warning about the increasing downside risks to the economy, primarily stemming from the escalating geopolitical tensions in the Middle East and their potential impact on international oil prices. In its latest, Green Book, Economic Assessment for March, the Ministry of Economy and Finance acknowledged that the nation's economy continues its recovery trend for a fifth consecutive month, propelled by robust exports, particularly in semiconductors, and nascent signs of improvement in domestic consumption. However, the ministry underscored that the Middle East conflict could spill over into the real economy, driving up inflation and dampening growth prospects. This marks a significant shift in tone, signaling heightened vigilance from policymakers. Reinforcing these concerns, International Monetary Fund First Deputy Managing Director Dan Katz met with Deputy Prime Minister and Minister of Economy and Finance, Koo Yoon-chol, yesterday. During their discussion, Mr. Katz highlighted the Middle East situation as a significant downside risk to the global economy, warning that a prolonged conflict would negatively impact global growth trajectories and price stability. IMF Managing Director Kristalina Georgieva had previously stated that a 10% rise in oil prices could increase global inflation by 0.4% and reduce global GDP by 0.1 to 0.2%. Given Korea's high energy import dependency, such a scenario poses a direct and substantial threat to our economic growth and price stability. Deputy Prime Minister Koo acknowledged these risks and assured Mr. Katz that the Korean government stands ready to deploy all available tools, including a swift supplementary budget, to minimize the impact on the economy and livelihoods. The government has also initiated a 24-hour monitoring system to track developments closely. While Korea's response to internal and external shocks was praised by the IMF, the emphasis on proactive measures indicates the seriousness of the situation. Turning to the financial markets, global equity markets showed signs of recovery following reports that the United States and Israel are pursuing de-escalation regarding the situation in Iran. This led to a dip in international oil prices and a rebound in major U.S. indices from their intraday lows. Here in Korea, the Kospi Index opened strong, trading above the 5,800-point mark, largely driven by institutional and individual net buying. The KOSDAQ market saw an even more robust performance, climbing over 1%, with pharmaceutical firm Samsungdang Pharm notably surpassing EcoPro to become the new top-tier stock by market capitalization. However, beneath this cautious optimism, several factors continue to exert downward pressure. Foreign investors have been observed selling off large-cap stocks, particularly in the semiconductor and automotive sectors. Furthermore, concerns linger about a potential slowdown in momentum after NVIDIA's GTC conference, and the $1 exchange rate is approaching the critical 1,500 won threshold, which could exacerbate import-driven inflation. Earlier, higher-than-expected U.S. Producer Price Index data for February and a hawkish stance from the U.S. Federal Reserve's Federal Open Market Committee meeting also contributed to market unease. Despite these headwinds, we're seeing an interesting trend among retail investors, particularly those with pension funds, who are increasingly allocating capital to bond equity hybrid ETFs, with their net assets now exceeding 11 trillion won. This suggests a strategic move to balance risk and seek higher returns in a volatile environment. Moving to the industrial landscape, the focus on future growth engines has shifted dramatically over the past decade. What was once predominantly eco-friendly energy is now overwhelmingly AI and semiconductors. This transition reflects the nation's strategic pivot towards cutting-edge technology. The semiconductor sector, in particular, appears to be entering a super cycle. Samsung Electronics is reportedly bolstering its AI semiconductor capabilities, having secured significant foundry contracts from major global players like Tesla and Apple last year. Qualcomm is also expanding its ecosystem in Korea, demonstrating strong partnerships from mobile technology to robotics. Investment sentiment reflects this trend, with top-performing investors continuing to heavily purchase shares in companies like SK Hynix. Amidst these serious economic discussions, Deputy Prime Minister Koo Yoon-chol also shared a positive outlook on the cultural sector's economic impact. Ahead of BTS's highly anticipated comeback concert, he remarked that while the direct economic value generated could run into trillions of won, the indirect, intangible effects would be tens, even hundreds of times greater. This highlights the significant and often underestimated contribution of cultural exports to Korea's national economy and global soft power. In the real estate market, we are observing a cooling trend. The adjustment in apartment prices, which began in Seoul's affluent Gangnam 3 districts, Yongsan, and Guangdong, is now reportedly spreading to other prime areas along the Han River, including Seongdong and Dongjak districts. This marks the 7th consecutive week of decelerating price increases in Seoul, influenced partly by an increase in listings from multi-homeowners. Concurrently, the *Jaeon's long-term deposit lease market in Seoul is experiencing what some call a freezing period. In areas like Naeon and Jungnang, known for mid to low-priced apartments, Jaeon's * listings have reportedly plummeted by 60% in just 3 months. This rapid disappearance of supply is pushing up Jaeon's prices and accelerating the conversion to monthly rent, significantly increasing the housing burden on tenants. Paradoxically, despite falling transaction prices, some homeowners in redevelopment areas along the Han River, such as Jaeangdong and Mokdong's 7th complex, are facing dramatic increases in their official property tax assessments. Economically, the challenges extend to our self-employed sector. The number of self-employed business closures has surpassed 1 million, marking a severe crisis. Total loans to self-employed individuals have surged past 1,000 trillion won, with the delinquency rate increasing by 3.6 times in the past 3 years. This demographic is facing a formidable triple challenge: dwindling consumption, high interest rates, and structural shifts in industries, collectively pushing many to the brink. On the international front, U.S. Federal Reserve Chair Jerome Powell recently signaled that the option of further interest rate hikes is not off the table, acknowledging the uncertainty in the economic outlook, particularly regarding potential energy shocks from the Middle East. Meanwhile, Korea's Trade Minister, Yo Han-ji has warned of the potential for an expansion of U.S. Section 301 trade investigations, urging a concerted, whole-of-government response to protect national interests. In a plea for international cooperation, the Ukrainian ambassador to Korea expressed significant potential for mutual partnership in the long-term reconstruction and modernization of Ukraine, beyond the immediate conflict. Finally, a look at artificial intelligence. Leading MIT economists, including Nobel laureate Daron Acemoglu, are advocating for a pro-worker AI approach, emphasizing that AI should serve as a tool to augment human capabilities rather than replace workers entirely. They argue that policy intervention is crucial to guide AI development towards enhancing productivity and reducing labor market inequality. In Korea, AI-based employment services are already yielding impressive results. Last year, 172,000 people found jobs through AI services, a 66% increase from the previous year. Specifically, 21,000 individuals secured positions through AI-recommended job matching, highlighting AI's growing effectiveness in connecting talent with opportunities. For our investors and general viewers, the current economic landscape presents a complex picture. While the underlying recovery in exports and critical sectors like semiconductors remains a strong foundation, the geopolitical risks, particularly the trajectory of oil prices, demand close attention. These factors will likely contribute to continued market volatility and could influence inflation and interest rate decisions. Investors might consider diversifying portfolios and focusing on sectors with strong long-term growth potential, such as AI and advanced manufacturing, while remaining cautious about market-wide downturns triggered by external shocks. For the general public, vigilance over rising living costs, particularly housing and energy prices, is essential. Proactive policy measures, including potential supplementary budgets and targeted support for vulnerable sectors, will be critical in navigating these turbulent times. That's all for today's economic news briefing. Thank you for joining us.